And it's 1:30 p.m. right here in Lagos, Nigeria. Coming up, Kenyan President William Ruto today signs controversial bill into law that raises taxes on a wide range of items. And the gold division at the Cairo Chamber of Commerce raises gold processing fees for gold jewelry by 10% starting 1st of July. And wheat jumps 2% after Wagner mutiny in Russia. Great to have you join us on the show right here in Lagos, Nigeria. First off, let's kick off with the markets. Let's look at what's happening on the African continent. We see its positive sentiment there with the NGX up 0.35%. Last time I checked, 59,413 points. I'm watching that 60,000 level. And we see South Africa, that's down 0.28%. On the flip side, other markets we track in Egypt, we see the EGX 30 there up 1.86%. Big move to the upside at 17,609 points. We'll see Kenya close on Friday. That's a positive 0.32%, 107 points for the all-share index. Now let's drill down on what's happening on the NGX. First trading day for the week. Let's take a look at what's driving sentiment. Aurelua Odetunde now joins me, research analyst and Korea Asset Management. Great to have you on the show.
Thank you for having me. Good afternoon.
Good afternoon. So last time I checked, the market was firmly in the green. How's it looking now, and what's driving sentiment?
Yes, certainly. I mean, I saw the figures you put up. Markets are up 0.35%, but as at the last time I checked, it's now up 0.46%. So there's still a marginal increase. I mean, coming from where we were last week, we also saw that week on week the gain was quite marginal, 0.35%, and now it's doing 0.46% today. And most likely we expect it to close up due to the counters that are currently on a positive gain. So we are having, stocks like Access Bank and UBA that are recording positive gains, same as GTCO. And these are large cap stocks. And, when these stocks, are able to register positive gains, that has a positive effect on the entire market. But we've also seen that some couple of stocks, some small cap stocks have also registered, some 10% gains. But, like I said earlier, it's more important when you look at the large cap stock because those are the ones that actually move the markets. But if you look at, where the market has been for the last week and, today, it seems that, market sentiment has in a way cooled off. We saw that, most part of June and the ending of May, we saw that there was, a lot of bullish sentiments driving the market. We saw due to the fact that have a new administration in place. There's also some reforms that have also been announced, like the FX unification, the suspension of the central bank governor. So that has had a positive effect on how people view the markets, how people view the economy, and our likely expectations for the fixed income space. And that has also driven the banking sector's stocks upwards. So essentially, that sentiment has cooled off. Now, large cap stocks are now being held on to by a lot of investors. They are not necessarily selling because, at the rate at which we saw those stocks significantly gain, we are not seeing the decline happen that same way. So essentially, we think that those most investors are holding most of those stocks. They are expecting that, Q2 results will soon be out. We are going to be seeing the dividends that will be declared. We'll be looking at the performance of those companies. So we expect that one will shape market activities. But for now, there's more interest in small cap stocks.
We've seen a lot of interesting moves in sectoral performance for the market. What sectors are you considering now?
Yeah, certainly. I think from our point of view, we are looking at more defensive sectors. We are looking at sectors that would not easily be. There's no sector that will not even be affected by these reforms. We've seen the unification of the FX rate is now higher. PMS subsidy has been taken off. So, fuel cost is higher. Diesel still remains an unregulated market. So it moves in line with the prices we're seeing in the international market. So essentially, we're expecting, we are looking at more defensive sectors. We are looking at sectors we think that irrespective of the macroeconomic conditions, they will still deliver. So, for one, we can't definitely rule out banks. We've seen that last year, a lot of them took, significant impairment charges due to what happened with Ghana, the restructuring of their domestic bonds, and now we've not heard the latest in terms of his Euro bond, but we definitely expect that there will be some sort of level of haircuts on Ghana bonds. So what we've seen that most banks have done is they've taken, significant impairments in their 2022 financials. So we don't expect that they'll be taking those significant impairments in 2023 anymore. So that will reduce. And, in some banks, we expect there will be a bit of write-backs, impairment write-backs when we get to see clarity around, the Euro bonds market, the Ghana Euro bonds market. Another thing we're also expect to see drive in terms of non-interest income. So we know that now that FX rate is now, trading at around 700 plus, there will be FX revaluation gains, especially for banks that are holding dollar assets. But for the ones that have FX obligations, that's where we might see an issue. And if you look at, fee and commission income, we also expect that will be driven by significant online transactions. If you also take a look at, the agricultural space, we also expect that, that's a defensive sector on itself. And, given the Russian-Ukraine crisis that we've seen, commodity prices have skyrocketed. And we've noticed that most players in the FMCG space as well as the manufacturing space are considering more local substitutes, because now importation costs will now become higher, freight costs are now much higher. So they are looking more at local substitutes. So I think recently or this morning I saw that Nestle Nigeria is considering replacing cornstarch with cassava. So we expect that there will be increased demand for a lot of agricultural products that will affect the revenue for most of those companies, and they'll be able to deliver good returns. So we also see that.
All right, Oreoluwa, but before I let you go, we're running out of time now. Just one word. What do you see dominating this week? Is it buy pressure or profit taking?
I won't call it buying pressure. Buying pressure will mean that we have significant buying interest in the market. So I'll just say positive sentiment is what we essentially expect in the market. So we expect to see more gains on some small cap stocks, like I've earlier mentioned. But, the big cap stocks are still looking for direction in the market, and which would come, significantly from the Q2 corporate performances as well as the dividends they're expected to declare. So, they are positioning, already for dividends, most investors. We just would see how that will play out in the market.
All right. I guess we'll be watching out for all of that and watch how the market actually closes today. Thank you so much, Oreoluwa Today, research analyst and Korea Asset Management. It was great having your perspective.
Thank you for having me.
All right, now let's get a sense of how markets are looking in the UK. Juliana joins me from our London studio. Great to have you, Juliana. So we see UK fixed rate mortgages costs have jumped to new 7-month high. Looks like more financial pressure on borrowers.
You're absolutely right. Good afternoon, Laddie. Following Thursday's 13th successive rise in interest rates by the Bank of England, Jeremy Hunt, the Chancellor, met with mortgage holders, mortgage brokers, banks and building societies to try and get out of what the Labour opposition party have called a mortgage catastrophe, because, of course, once interest rates rise, it's directly linked to mortgage interest rates. And we know that over 1.2 million households are already struggling to pay their mortgages, and there are severe fears that there will be significant defaults before the end of the year. Now, mortgages have been going through a significant issue over the past couple of months. It was first triggered by Liz Truss and the unfunded tax cuts she tried to put through the British economy. It did appear to be calmed down by Jeremy Hunt, who was the Chancellor brought in to try and ease tensions. But because inflation is just still so stubborn, it's currently at 8.7%, but it doesn't appear to be going anywhere. This is negatively affecting anybody that's taking out a huge loan to cover their costs, and not just mortgage owners, I've got to say. It's also affecting those who are driving pretty expensive cars, who are having to pay almost double than what they were paying a year ago. And now we know that the likes of HSBC, Nationwide, they're some of the biggest lenders for mortgages. They've been pulling their products left, right and centre because they're not sure whether or not their customers can afford it. And that is a big issue going forward. We are expecting Andrew Bailey, of course, who's the governor of the Bank of England, to speak in Europe on Wednesday about what's going to be happening with interest rates. And I know that the Treasury, as well as investors, are going to be listening clearly, because even though the UK is not in a recession, we are limping our way out of recovery. And if those who are supposed to be the most well-off in society, those who own homes, are struggling to pay their debt, then this is going to have a negative impact on the entire GDP. So it's a significant issue. Lots of people in a major crisis at the moment, and the British government remains under pressure, as they did during lockdown, to try and offer some sort of support to those who are at risk of a default.
Right, and Jeremy Hunt is definitely having a lot of meetings this week. He's going to meet with UK regulators, and the focus seems to be on rip-off charges. Tell us about this.
Yeah, you're absolutely right. It's not easy holding the portfolio of the Chancellor of the Exchequer for one of the world's largest economies. And Jeremy Hunt has been busy over the past couple of days. He is going to be busier much later, because he is going to be speaking with the Competition and Markets Authority and other regulators to try and find out why some of these wholesale price-cutting costs that the big corporates have been receiving over the past couple of months is just not trickling down to consumers. I was speaking to Innie this morning on Business Morning about Sainsbury's announcement that they'll be putting in £15 million of cost-cutting prices to make it much easier for beleaguered consumers to buy some of their staple items, such as pasta, bread and honey and all of those other produce. They're not doing this on their own, of course. They are also under increasing pressure by the CMA and by other regulators to make sure some of these wholesale costs are passed through. Of course, we know the war in Ukraine is still raging on, but some of the energy prices, the heights of the energy prices that we were seeing about 6 months ago, we're just not seeing them now. But yet, in some cases, inflation in this country remains nearly at 20%. So he is going to be speaking to regulators to make sure that corporates are not scrupulously benefiting or picking up their profitability on the backs of people who are pretty much struggling to eat at the moment. So yes, there are going to be a series of conversations that are taking place in this week, and we're going to be waiting to see what data we get out for mortgage brokers on Wednesday. That is going to be key economic data in the UK to see if we are going to be heading into a recession, which lots of people suggest that we may be.
Yeah, the dreaded R word there. But how are the markets looking?
No surprises, not great. Red is the colour of the FTSE at intraday in the UK. The all shares are down. It's down by 0.45%. The FTSE 100 at intraday is down by 0.35%. And the FTSE 250, the domestic market, that's down by triple-digit figures at 1.01%. In the currencies market, the British pound is trading up against the US dollar by 0.02%, up to against the euro by 0.07%, but down against the Japanese yen at intraday by a quarter of a percentage point.
All right, Juliana, thank you so much. Always great to see you. Thank you. All right, now let's take a look at what's happening in Europe. Now, after the two-day summit in France aiming to reshape the global financial system ended with few concrete results, and Friday, wealthier countries failed to respond to the Global South's calls for debt relief and a new financing for climate action. Joining me now as we have Chiponda Chimbelu right there in Berlin. Chip, what's been the reaction so far to the summit?
Well, there's been some disappointment from the so-called Global South because their demands weren't met. The summit on the new global financing pact failed to deliver on what it had promised, a new global financial system that would be more favorable to the needs of developing countries, helping them put the priority on fighting poverty and climate change instead of managing their debt levels, as is often the case because of how the global financial system works. So there was a hope that the summit would help deliver some debt relief for heavily indebted developing countries, but that didn't happen. The takeaway, though, is that there is at least an agreement on the need to reshape the global financial system from both the global north and the global south. And the real issue right now is finding a way to finance it. wealthier countries may not be prepared to foot the bill, and they also need to consider whether they'll be able to sell such a deal to their voters in their home countries, because of course their voters want to see them solving challenges in their own countries and not, changing the global financial system.
All right, Chip, break it down for me. What's been achieved at the summit so far?
Well, the head of the World Bank said that it plans to introduce a mechanism that would allow low-income countries to pause their debt payments when they are hit by a crisis. And the IMF said it had reached a target of making $100 billion in a reserve currency available to climate-vulnerable countries. But many debt-ridden developing countries will be looking with hope at an agreement that Zambia struck with its bilateral lenders. Now, that's something that the Zambian president tweeted about at the summit. He said the country's bilateral lenders agreed to restructure $6.3 billion of debt. Now, we don't have too many details of the deal, apart from the fact that creditors led by China and France agreed to extend maturities on their loans to over 20 years. The deal will give hope to countries like Ghana and Ethiopia, which are also struggling with high debt levels. This deal could provide the blueprint for debt relief going forward. China is Africa's biggest bilateral lender, and many have said it was dragging its feet when it came to a potential debt relief agreement for Zambia. So the latest deal with Zambia shows that China may be ready to strike such deals, perhaps even with other countries.
Yeah, debt relief definitely needed right now. What will the markets be watching today in Europe?
Well, the markets are expected to be calm today after the unrest in Russia, where an armed uprising posed a threat to Vladimir Putin. And that's something that EU foreign ministers meeting in Luxembourg will be discussing. Some analysts are warning that the unrest could make Russia's President Putin more aggressive. And that would, of course, have implications for security here in Europe.
Right. Thank you so much, Chiponda, right there in Berlin. All right, we'll take a break now. When we come back, we'll take a look at how crowdfunding, how that's doing with capital raising right now in Africa. That's our next conversation. Just stay with us. Welcome back to watching Business Incorporated live on Channels Television. Now to our next conversation. In recent years, alternative lending and crowdfunding services have grown in popularity throughout Africa. And these platforms open up new avenues for people and small enterprises to obtain financing that was previously unavailable through traditional banking methods. But with inflation still high globally and central bankers still in the hawkish stance, what's next for crowdfunding in Africa? Joining me now is Dr. Roland Igbinoba, founder, CEO, Prop Crowdy Limited. Great to have you on the show.
Thank you very much, Ladi. Happy to be here.
Fantastic. So paint a picture of how crowdfunding is doing as an alternative to traditional financing. Is it really working, in these climes?
Well, the good news, Ladi, is that the Securities and Exchange Commission in January of 2021 approved crowdfunding rules. And if you look back to what has happened within the market, it is really a lack of trust. Within the agri-tech space, there were a lot of startups who were doing crowdfunding, but of course, because it wasn't regulated at the time, it had a problem. But with what we have today, with the regulations in place, I think alternative financing is really the way to go, especially for MSMEs. In trying to paint a picture, if you look at the MSME space in Nigeria, for example, we have over 40 million MSMEs, right? And over 67% of those MSMEs are owned by youth. So this means that these guys do not have either the capacity to get bank financing. And this is where crowdfunding is really, really taking shape. So what we have seen since the regulation came in is that currently about 2 startups have been given license by the Securities and Exchange Commission. I mean, those that we know. One of them is a firm that I'm also involved in, that I'm a founder of, which is Prop Crowdy. And then there's another one that is Obilex. And so what is happening is that since that regulation, there's been a lot of trust being garnered in the market. But there's a lot that needs to be done. And as you know, with regulation, it means that the consumers have confidence. And just looking at the fact that MSMEs are unable to get funding from traditional financing institutions, what it means is that it's a good place for crowdfunding to start to bolster in the country.
All right, break it down for me now. Who gains more from the crowdfunding alternative? Is it a business raising the capital, or the multitude of investors providing that capital? Do investors make a good buck for their investment here?
Okay. So, Ladi, the way to look at this is it's in a very simple way. Is that look at bank balances, savings on bank deposits today. All right. At best, I think recently the CBN increased interest rates to about 4.2%. At best, what you get in your current account, or maybe in savings, will be anywhere around 5 to 6%. So if you leave your money there, that's what you earn. But if you get into crowdfunding, there's the possibility of earning anywhere between 15 to 20%. And when you come to real estate, which is where Crowdy, has its expertise, we're looking at yields, above market yields of around 9.5%. So to answer that question, both parties gained. One, the difficulty in MSMEs to raise funding is totally eliminated when it comes to crowdfunding. The speed with which they raise funding also comes to fall. Rather than going to the bank and being at the bank and asking for collateral and asking of all kinds of securities or collateral to be able to fund the MSMEs, with the crowdfunding, the MSMEs is quick to financing capital expenditure. On the other side, again, like I said, investors also gain. So the point is, both parties, both the businesses and the investors gain when you talk about crowdfunding.
Well, I guess it's a win-win in your opinion. But
absolutely.
What are the risks of alternative, lending and crowdfunding, platforms in Africa? Every investment comes with some kind of risk.
Absolutely. And I'll tell you, so first and foremost, when this is done in an unregulated market, the risks are higher. So today in Nigeria, that it's been taken care of by what the Securities and Exchange Commission is doing by licensing startups. And like I mentioned earlier, 2 of these startups have been licensed already. Again, the traditional risk appraisal doesn't take away that is not left behind when you are doing crowdfunding. So, for example, an MSME who wants to raise money on the platform, we still have to undergo the capacity to pay. We still have to undergo the market fit. And so there are risks, but what we say is that these risks are mitigated. So, for example, the business that you are doing, what is the market size? Do you have, if you talk about real estate and you want to develop, say, a 20 unit of 2-bedroom apartment, for example, we are going to be asking you, how much is this selling for, right? Who is buying? Do you already have off-takers? So again, Ladi, the risks are there, but the good thing is that they are mitigated just as in traditional practice. The advantage for this is the speed to market and the fact that you can raise money from different people. Another thing that is important, Ladi, let me say is today, if you look at the real estate market, for example, for you to start to think about investing in real estate, you need to have upwards of maybe 500,000 naira or about $1 million naira. But today, with crowdfunding, with as little as 10,000 naira, you can invest in a real estate asset. And so that brings the win-win situation to the entire game. And so again, just to summarize on the answer to your question, there are risks, but these risks are clearly mitigated. Something else that is very important to touch on, Ladi, is that when you crowdfund under the regulations, the money stays with the custodian bank. There are about 8 custodian banks in the country today.
Right.
And so what SEC has said is that the money stays with the custodian bank, and then the custodian bank disburses the funding to the MSMEs. Okay. So the risk of some startup taking your money and running away is totally eliminated.
Yeah, we definitely need that eliminated because no one wants to lose their funds in that way. So Absolutely. Much to unpack there. Thank you so much, Dr. Roland Igbinoba, founder of PropTech Nigeria. It's great having your perspective today. Thank you.
Thank you very much, Ladi. Thanks for having me.
That's Crowdy, Prop Crowdy. Thank you so much there. So let's move on now to stories. We see the Kenyan President William Ruto has signed into law a bill that increases taxes on a wide range of items, despite criticism that it will worsen economic hardship for citizens. The approved tax package includes doubling the tax on fuel to 16% and introducing a new housing levy. And the gold division, the Cairo Chamber of Commerce, has announced a 10% increase in gold processing fees for gold jewelry, effective from the 1st of July. According to the new decision, 100-gram 24-karat gold bars will be considered jewelry and will be subject to processing fees and a 14% value-added tax. However, gold bars weighing over 100 grams will be classified as bars exempted from VAT. And that's the show today. Thank you so much for watching. I'm Ladi Williams. I'll catch you again tomorrow. Bye-bye.